welcome to the CNBC TV 18 special. I'm Shireen Bhan, and we're in conversation with the new CEO of Cognizant, Ravi Kumar. Ravi, thanks very much for joining us here on CNBC TV 18, and congratulations on taking over in January. It's been about 4 months, and it's been quite a trial by fire, I would say, not just for you, but for the tech business in general at this point in time. Take me through what the last 4 months has been for you like.
Thank you, Shireen, for coming over to our Hudson office at Cognizant, and excited to see you after a long time. Yeah, so I joined in January. It's been a great time. I know I've gone back to the archives of the company, the history of the company. You can learn a lot out of it. There are three things which kind of resonated about what Cognizant is. Cognizant is a very young company. It's only 25 years old. Roots in India. In
fact, you turned 25
literally this month.
Yeah.
We are listed for 25 years this month, and deep roots in India. We are the second largest employer in India in our tech services space, and probably the most invested American firm in India. We have 260,000 employees. The three things which stuck to me as I curated my insights. I think Cognizant has a growth mindset, so I want to make sure that we accelerate and create growth momentum inside the firm. The second is it has a founder's mentality and an entrepreneurial spirit, and that's the reason why Cognizant has been so fast growing. And the third, I would say, is client centricity and the flexibility and the ability to co-create with clients. When Cognizant was born in 1996 to 1998, it was the tail end of the Y2K boom. And it was actually the dot-com burst. And that time, as it was getting built, it was built for the next generation of technology coming in, which is application outsourcing. And the dot-com burst was important because it left a lot of telecom infrastructure freely available. So you could do more things beyond Y2K. So Cognizant built the entire value proposition on a confluence of technology and industry, flexibility and co-creation with clients, and a huge entrepreneurial spirit. These three, if I can curate it and I can catalyze the heritage, I think we have a winning combination.
So speaking of catalyzing the heritage to ensure that it is a winning combination, what is it going to mean in terms of tangible next steps now? You have, you've already started to address that. The expectation is that with some of the measures that you've taken, you will be able to arrest the market share decline as well as grow market share. You're also in the market to add to your large deals. We've started to see some movement on that front. What is the winning strategy going to look like in terms of tangible next steps?
So Shireen, the first quarter, first earnings which I actually had for me, we had 28% increase in bookings, Y-on-Y. 30% of those bookings came from large deals. So we've created a lot of outreach on large deals. And we've created a lot of infrastructure inside the company to cater to those large deals. So I'm very confident that that runway is going to work.
So 100 million kind of deals, what could the pipeline look like potentially?
More than 50 million TCV is what a large deal is. And 30% of our bookings last quarter was that. And 28% I had an increase in bookings. It's only my first quarter, so I'm building the runway for the future. Because whatever bookings we do now will give us opportunities with backloaded revenues. The second is we want to be an employer of choice. We are a big employer in India. We want to be an employer of choice. Our attrition rates have started to fall since
from 30% down to about 23%.
It's fallen last quarter, and the trend is looking good.
So where do you believe you could be?
The quarter is still on, so I'm tracking that number very effectively. We are a company we deeply believe that we could be an employer of choice, and there are multiple things we do well. We create global mobility for our employees in India. In fact, we are one of the biggest platforms for global mobility in India. We hire from schools and build careers with inward mobility, internal mobility for our employees who can traverse the capability value chain and get global opportunities. We're a big learning infrastructure. 25 million hours of learning happened on our platform last year. We are also a very purposeful platform. Back in India, 40,000 of our associates spent almost 200,000 hours on community work, on reskilling. So there are a whole bunch of exceptionally good employee value proposition levers which actually hold for Cognizant as a company. We're very entrepreneurial. That gives ability for our employees to explore more. In fact, I launched an initiative called Blue Bolt, which is an initiative around grassroots innovation. And we want the 350,000 plus employees of Cognizant to incrementally explore more things beyond doing project work. The third, which is what I did in my earnings, is have operational discipline and simplify our operations. So what I did was I announced a program called Next Generation, where I'm taking out cost. And I'm actually transitioning my real estate to tier 2 cities in India so that structurally I can transfer those savings back to growth infrastructure and catalyze growth. And if I catalyze growth, growth is the panacea for all problems. I think it will have an operating impact on my margins as well. So I kind of created the whole, I would say, playbook. Of course, the market is very uncertain. Some sectors are continuing to be very soft. Discretionary spend is very soft.
Is it looking worse than May? Because in May you said that you were seeing clients holding back. You were seeing clients holding back on discretionary spends. The environment was looking soft. Do you continue to see that revenue softness?
There's no change in my narrative since what I have said in May. Some sectors are impacted on discretionary spend, and it's also falling off the cliff in some places.
Financial services? Financial
services is the sector. Of course, we have a huge presence in healthcare. In fact, our healthcare economy is one of the largest in the world. Between healthcare, health equipment, devices, life sciences, we are the biggest provider. That is resilient to economic cycles. So that's an advantage we have. But overall, I'm seeing a lot of large deals. Large deals come in two swim lanes, Shireen. One is cost takeout, efficiencies, and vendor consolidation. Those deals are actually more active when the economic cycles are soft. And we're seeing more of that. Then there are transformational deals which come with discretionary spend. They are much more softer. We're seeing less of them. Hopefully we can transition to them over a period of time. The smaller deals, which are discretionary spend, is very soft. So I think this is how the market is evolving, and I'm hoping that the progress we've made so far, as well as what we are planning to do for the future, I'm very hopeful that we could bring back the growth mindset of Cognizant.
By when do you believe that you will be able to get closer to your peers, if not on par with your peers, in terms of growth?
It's hard to say when it would be, but what I'm certain is bookings momentum, as I said in the first quarter, with a healthy pipeline, is looking good. I think it's a virtuous self-reinforcing cycle of employees and clients. I mean, we all think demand is what is needed, but you need a self-reinforcing virtuous cycle of employees and clients. If your employees stay with you, your clients come to you. If your clients stay with you, your employees come to you. If you're on that cycle, it's an easy business. If you're not on that cycle, it's a hard business.